Good afternoon and welcome to NYFP. In midday trade on this Thursday, we are seeing the equity averages all higher by about a quarter percentage point. Earlier today, we did see the Dow Jones Industrial Average hit another record high. Joining me to weigh in on the action is Sandra Navidi of BeyondGlobal. Sandra, good afternoon and thanks for joining me.
Thank you for having me, Remy.
Well, all week there has been focus on this Dow Industrials rally. The Dow did hit new intraday highs today, and we continue to see closing highs for the Dow. But what do you think is behind this rally?
Well, first and foremost, the Fed measures. It brings liquidity into the market, and then due to the low interest rates, you can't make money off your money, so that leaves no alternative but to go into the stock market.
And Sandra, we've been hearing pundits left and right talking about this rally, and the market is not necessarily a reflection of the economy or what's happening to Main Street America. So what is your take on what we're seeing and the correlation?
Well, I think that there's a disconnect. We've seen earnings are quite good, but that pertains mainly to big companies, blue chip companies. That's not necessarily a reflection of how medium-sized or small-sized companies are doing. Unemployment has become a little better, but we still have a large problem with underemployment and wage growth that has been stagnant. As a result, you see lower demand, lower growth, and that against the backdrop of further deleveraging.
And bigger picture, we have some fundamentals that we need to keep our eyes on here in the U.S. So do you think this rally we've been seeing is sustainable, or do you think we'll get a pullback sometime soon?
I think at some point there has to be a pullback. It's very hard to say when that will actually happen, but primarily what has happened is that we see some sort of circular self-dealing where the government issues paper and the Federal Reserve buys it. Meanwhile, that has bought time, but we haven't really created solutions. On the contrary, the political establishment is in a deadlock, so it's probably not sustainable. And when it's going to turn around, when there is a reversal, it's probably going to be sudden.
And we'll keep an eye on that on this side of the Atlantic. But I do want to move over to the Eurozone. We did get the European Central Bank announcing its rate decision, which was unchanged as widely expected. And we did get some comments out from Mario Draghi today. Following his comments, we saw the euro-dollar break above the 131 level in today's trading session. But what did you make of that meeting, and were there any surprises for you?
No, I don't think there have been any surprises. The ECB has also been very supportive, but again, for the same purpose, to buy time. We see Europe is pretty much a catastrophe. Italy's in a almost depression. The situation in Spain is quite desolate. So I think they're in a wait-and-see mode, but they have to get their act together.
And Sandra, last but not least, before we wrap it up, I do want to ask you a little bit about the Italian elections as well as Cyprus. Now, earlier this week, we got the Eurogroup meeting taking place in Brussels, and they did announce the Cyprus bailout. And Italy does remain in a stalemate in terms of their parliament. So going forward, what can we expect from those two Eurozone countries?
Nobody knows exactly what is going to happen in Italy. There's a bit of a, if they form a government, it's going to take several weeks. When they have a government, because it's a minority government, it's inherently unstable. The question is, will there be new elections? The issue here is that new elections need to be called by the president. The president cannot call new elections during the last 6 months of his term. So we have to wait. A new president can only be called by a parliament, so they have to form a parliament first. As you see, it's quite a complicated situation.
Okay, Sandra, well, thank you so much for joining me today, and thanks for all your insight.
You're welcome. Thank you, Remy.